Well, how high will mortgage rates go? Hi, this is James Hecker, mortgage advisor, NMLS number 214601. And well, 2 weeks ago, interest rates had hit a low of the past, well, since July, actually, the lowest they'd been since July. And the market was kind of optimistic about that until the last Friday, not this previous Friday, but the one before. The jobs report came out, and it was much stronger than was expected, and that was basically a bucket of cold ice water over the optimism in the market about mortgage interest rates. And so mortgage interest rates have been getting higher. Unemployment is at a 50-year low. Some areas of the economy are showing resilience. Some areas are not. Housing, tech, wage growth, all of those are struggling. And before the jobs report, the market was, as I said, optimistic about the next Fed meeting in March. They thought that, well, maybe the Feds would only raise the interest rate again 0.25%, and maybe they would take a pause after that and not keep raising the rates as fast as they had been. But again, those Friday job numbers came out a lot higher than expected, and so that threw that ice water all over that optimism in the market. And so now we're looking at the Fed meeting in March. Are they going to raise it only a quarter? Might they raise it a half? Will they then go ahead and raise the Fed fund rate again in May? Those are the things that the market is thinking about as we see these mortgage interest rates going higher, because the market anticipates the moves of the Feds, not reacts to them as much. So the Feds really are walking a tightrope when it comes to this battle against inflation, and without throwing the economy into a recession. That's the goal. Get inflation down and don't throw the economy into inflation. And on a broad spectrum, it's working. It looks like inflation numbers might be coming down. Some areas that I'd mentioned are showing resilience. Some areas are showing a slowdown. And that's leading commentators to use a term called a rolling recession. Now, what that means is that not all of the whole country is going into a recession, but some areas are seeing those effects while other areas are growing. And so if that kind of rolls through the economy, there's going to be some aspects of the economy that will be doing well while others are struggling, as opposed to a full-fledged recession where everybody, all sectors of the marketplace, are struggling. So the consumer report, consumer price index, is coming out this week, and that's going to be an indicator. If we see good numbers, lower inflation, we're likely to, that's going to be good for interest rates. And if we see higher numbers of inflation, that's not going to be so good for mortgage interest rates. And as I mentioned before, even with mortgage interest rates being more than double what they were at the beginning of last year, they're still on the low end of historical averages. So there's still a lot of people out there that can afford homes and are getting back into the market. So inventory is down a little bit this past week, which makes competition for homes greater. Talking again in my market in Southern California. And there are micro markets throughout the area as well. Yeah, people are starting to get used to these rates. They're starting to come back out, and for the reasons that they wanted to buy a home in the first place, looking at, okay, let's get into this. If rates do drop, we can consider refinancing, and we'll own a home. So that's kind of where things have been this past couple of weeks, where things are going. And if you'd like to see how this will affect your ability to buy a home, give me a call. Don't forget also that in my previous recent videos, I'd mentioned that the Fannie Mae and Freddie Mac, the agency that oversees them, has increased the fees for certain types of loans. So investment loans, second homes, cash out refinance, and even those well-qualified buyers with high credit scores that are putting 20% down, their fees are increasing a little bit to help subsidize the lower credit score buyers. So those are coming up soon. Basically anything that you apply by the end of February, probably not going to see those increases, but anything that funds and closes before April 5th doesn't have that increase in it, but anything after that, you're going to see these increases, and in some cases they're substantial. So even if we do see interest rates coming down a little bit, those additional fees are going to offset some of that savings. Give me a call, 661-714-2145. James Hecker, mortgage advisor. I'd love to talk to you about your specific situation and help you figure out ways to become a homeowner, to get some of the equity out of your home to do something else, or to buy a vacation home or an investment property. Thank you so much.